anxious about your small cap fund investment? You're not alone. With the recent 25% plus drop, many investors are wondering, is it time to pull out or hold on for long-term gains? Small cap investors are facing a grey, stormy season. The index has dropped over 18% as of April 15, 2025, and more than half of the small cap stocks are down by 50% or more from their all-time highs. Add to that the sentiment of veteran investors calling small caps expensive and urging SIPs to be paused. No wonder there's panic in the air. But is this the time to exit or double down? Let's explore that in detail in this video. Hi there, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. First, we get unrealistic return expectations because the recent past has spoiled investors with 1 year return value like 35% and 3 year return value of 23%. After such gains, many assumed double-digit returns were the new norm, but history tells a different story. When annual returns cross 30%, there's a 60% chance of getting less than 10% the following year and a 26% of negative returns altogether. So ask yourself, were your expectations realistic or were you setting yourself up for disappointment? Number 2. Long and painful recoveries. The post-COVID rally made us believe that every market dip is just a short-term buying opportunity. But small cap corrections don't always recover quickly. In fact, they can stretch on painfully. After the 2008 crash, one of the worst performing small cap funds gave zero returns for 6 years, and between 2018 and 2020, small and mid cap funds remained stagnant over 2.5 years. So if you're looking for instant gratification, small caps may test your patience and your resolve. Number 3, liquidity challenges, because getting out isn't easy. When markets fall, many investors rush to exit, but small cap funds come with a hidden problem: low liquidity. Think of it like trying to leave a movie theater through a narrow door during a fire. First of all, top small cap funds require 36 days to liquidate just half their portfolio, and mid cap funds, they only need 17 days. So in a downturn, the mismatch causes fund managers to sell illiquid stocks at distressed prices, dragging down NAVs further. So are you ready to observe that additional hit? So now let us move on to understanding why staying invested in small cap funds might be the smarter option. First, long-term growth potential. Small caps reward patience. Take this: an investor who started a SIP in 2017 right before the 2018 correction is now enjoying 19% annualized return. Would you rather panic in a storm or stay the course and reach your destination? Yes, small caps are volatile, but they are also where future large caps are born. So if you are chasing above average returns, shouldn't you expect above average volatility too? Number 2. Mutual funds versus direct stocks. Who really wins? Picking individual small cap stocks? That's like throwing darts in the dark. Only 11% of small caps ever become mid or large caps. A whopping 62% fall into micro cap territory, earning just 2% CAGR. Compare that with mutual funds now. Even the worst performing small cap fund delivered 12.74% SIP returns over 10 years as of April 22, 2024. Fund managers filter through 4,000 plus companies, shortlist 600 and invest in 500 plus quality picks. It's a systematic process, not a gamble. So would you rather play the lottery or back a team with data, discipline and decades of experience? Number 3. Volatility reduces over time. Yes, small cap swings wildly, but time smooths the ride. Now let's take a look at the maximum versus minimum annual return since 2006. As presented on the tabular column, you can see that short-term pain is real, but jump off mid-ride and you miss the recovery. So over time, volatility fades and returns stabilize. So instead of timing the market, why not spend more time in the market? Now number 4, history rewards the brave. This is where data becomes wisdom. After every negative year in small caps, there's an 88% chance the next 5 years deliver 10% plus CAGR. That's not optimism, it's statistical reality. So ask yourself, wouldn't it be smarter to let history guide you, not headlines? Now, let us take a look at what should you do if your small cap fund is in loss. There's no one size fits all answer, but here's a guide that you can use. You can consider exiting if your goal is less than 5 years away and you can't handle deep volatility and market swings are impacting your mental peace. Or you can consider staying if you have a 7 to 10 year time horizon and you're investing via SIPs and you understand and accept the short term drawdowns. So ask yourself, is your portfolio built for storms or just sunny skies? So what should investors do now? Let's go through a practical action plan. So here's your post-crash playbook. Number 1, revisit your goals. Are they long-term? Then short-term dips or just noise. Number 2, check the allocation. Overexposed to small caps, then consider rebalancing. Number 3, continue SIPs. Stopping now is like refusing to buy when stocks are on sale. Number 4, pause lump sum investments. Let valuations cool off first. Number 5, speak to a certified financial planner like a CFP, because don't navigate rough waters alone. Fear may tempt you to act fast, but acting smart is what builds wealth. Now, what is the final takeaway from this video? Will you be there when the market bounces back? Because it's unfair to write off a player after one bad match. Likewise, abandoning small caps during a slump might cost you the upside that follows. Yes, the correction hurts, and yes, it might continue, but history, data, and experience point to one truth: recovery will come. The real question is, will you be there when it does? So stay invested, stay informed, and most importantly, stay true to your long-term goals. So are you ready to make smarter investment decisions? Because if you're unsure whether to stay invested or exit your small cap funds, don't make a move based on fear or headlines. Click the link in our description to book a free consultation with one of our certified financial planners who can review your portfolio, risk tolerance, and goals and help you decide what's right for you. No sales pitch, just honest expert advice. And don't forget to like, share, and subscribe for more smart data-backed investment insights every week. Until next time, thank you for watching.
Definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.